Good morning, traders and investors. Steve Gans here, still wearing the funky glasses a little bit for that eye strain. And I want everyone to know that a little later in this video, after I do my market analysis, I'm going to toss out an options trade concept that people should consider paper trading for learning purposes, for education. It's just a way for me to help tie in a trade concept or idea with the current market conditions to help people learn when is a good time to put on certain options trade versus other options trades. Look for that a little later in the video. So let's get into analyzing our markets. The S&P, of course, broke out here a couple of weeks ago, ran up fairly nicely, was looking pretty strong. Then all of a sudden it started this whole dip process that it's going through. Now that is not surprising. It had been pushing on the top of the Bollinger Band for some time. The relative strength, the RSI, had been pegged to the top of that gauge for some time. So to get some form of a pullback here is not what I would call out of the ordinary. So far, it's what we call normal backing and filling. What is a little bit concerning about this move is the volume picked up a fair amount in that down move, and there was a little bit of a gap here. Now, that was based on news-driven tariffs and job reports that are maybe being questioned, but that news caused that drop. We did rebound a little bit. We look and see there's a tail down here. So we, at one point, got all the way down to the bottom of that candle. Then we did rebound a little bit during the day, not a whole lot. But the bottom line is that we are now in an area that I think we're likely to trade in a channel here. Now, it's important to note that August, going all the way back to 1950, 44% of the time, we end August lower than we started it. So this is one of those half and half sort of months. September, 55% of the time, we end lower than when we started September. We are leaning into one of those times of years that does tend to have a little bit of a pullback in the market. So that's also something to be factored in here. Now, we broke out, this had been our prior highs. We broke out there many times on a breakout. That prior resistance will now become support in a pullback. Of course, news can trump that, pun intended. News can cause this to drop much more significantly, but under normal trading circumstances, normal chart pattern recognition, we should see some support in this general range. So again, my expectation for the foreseeable future is to chop back and forth in that specific range that box has identified. Now, my trade I'm going to suggest is going to be built on that here in a little bit. So let's take a look at SPY as well. Of course, SPY is going to look almost exactly the same. But man, SPY really had some volume increasing on it. So the ETF, because that's more retail traders, had definitely spikes in volume in it. We're going to look at volatility in just a second. And then we're also going to look at the futures contracts. So the S&P futures. Again, S&P futures really accelerated volume-wise. But again, overall, the same exact chart pattern. We had prior highs here. We broke out from those highs. Now we're pulling back to where that breakout occurred, and we're going to have to see if that does, in fact, hold. If we look at volatility on the S&P 500, volatility definitely did shoot up a bit here on Friday, but it pulled back a touch during the course of the day. If we look at that specific candle, we can see that volatility got all the way up to about 20 and a half, maybe even 21, somewhere in that range. And then it did pull back during the course of the day going into the close. So that's a good sign that maybe volatility was waning a little bit as we got closer to the close. Let's look at the Qs and how the Qs reacted. So again, very similar pattern. This is our former highs. We broke out of those highs, ran, and now we're pulling back. And again, much like the other patterns, I see a potential range that's going to form here for a period of time. possibly 3, 4, 5 weeks, maybe even a little dip lower down into this range. I'm seeing as largely range bound. Of course, news can send some of that off the rails depending on the level of the news. Let's look at the VIX and the Qs. So volatility in the Qs definitely spiked up a fair amount, but then they settled back down during the course of the day also. IWM, again, never has retained its former glory. It was trying, and it got up into this resistance area where I'd had that resistance area drawn for some time. Hit that resistance area, was at the top of the Bollinger Band. RSI was high. And again, my expectation was a little bit of a stalling or pullback in it also. And that's exactly what happened. It did pull back to this prior resistance that may become support. While we did drop through that during the course of the day, we did rebound to right at that line by the end of the day. Volume also picked up in that process, so we have to respect that as well. Volatility on the RVX, similar to the others, it did get fairly high during the day, almost up to that 28 mark, but by the close it had pulled back into the 26 range or so. So that's our general look at the markets. My expectations going forward are neutral to slightly bearish. We still have lots of earnings to come out. We need to see how the market reacts to those earnings over the next week or so. And of course, again, we're right in the heat of that whole tariff thing. Are they on? Are they off? What percent are they going to be? So those are some of the battles that the market is going to face here this week. Now, about that trade concept or trade idea, let's go back, take a look at SPY. And if we're looking at a range on SPY here that might go from this 640 or so down to around 620, somewhere in that range, and volatility is elevated a little bit. Elevated volatility means that the price of options is also elevated a little bit. When options are elevated in price, that's when I want to be a seller. So I am looking at a concept trade here that is essentially an iron condor. I am selling a put spread here on the lower side at about 615 because, again, my expectation is that I don't really think we're going to drop below that 620. I think that's the range that we might be in. And then to the high side of that, 640. So those are the two that I am selling short. And then I'm buying long. I am buying reinsurance so that I have a defined risk trade on the outside of each of these. So we have this call spread that I'm selling and this put spread that I'm selling. What I'm looking to have happen at this stage is I'm looking to have our market stay between these break-evens for approximately 10 days or so. I usually don't carry these all the way to expiration. I'll let this trade get to that 25, 30, 40% profit mark and then pull it off. So I'm just looking for the market to stay in this general range over a period of days. And if that happens, my T0 line, which shows the profitability of my trade, is going to start to mound up as decay happens. And then at some point in there, I will take my profit and move on. Now, the other thing that could happen here, in addition to the passage of time, is if our market stabilizes. Let's just say if we take a look here at SPY and our market just comes back up into the center of this range and stabilizes a bit, if that happens, volatility also is going to drop in our markets. So what happens to a trade like this when volatility drops? That also helps this trade. Again, the goal or the key to a trade like this is I am selling options when volatility is higher with the expectation that volatility is going to potentially drop. Now, if I am wrong and we open lower and volatility spikes up from there, that is not going to be good on this trade. further increases in volatility are going to hurt this. This is paper trade. I'm going to share the link to you in the notes down below. But if I were to think Monday morning when our market opens, if it opens up in that general range and there's not a big gap one direction or the other, and after 30, 40 minutes, things seem quiet, that's what I would go and put on this paper trade and then watch and see how it plays out over the coming days. I'm going to go ahead, make a copy of this or save this trade, and I'll just save it as Weekend Update Condor. Link will be in the show notes down below, but I would urge you to maybe play with this a little bit. You don't have to have OptionStrat to open that link. Anyone can open that link. It will take you to this page. But I would urge you to apply your own analysis. If you think, for example, that our market might go lower from here, maybe alter your trade a little bit. Maybe shift where you're going to sell this short put. You can see that by doing that, I have greatly reduced my downside risk in this trade. I have increased my upside risk a little bit. But if I have more of a firm conviction that our market is likely to go down from here, that might be a way I would structure this trade differently. On the opposite side of that fence, if I felt, geez, we're going to rebound hugely from here, but I don't know that we're going to go through that 640. But if I wanted to basically reduce my risk on that upside, I could consider doing something like this. I could tighten up that upper spread so that if we do bust out, my risk to that upper side is much, much lower. That's the benefit and the value of a tool like OptionStrat here, is that I can visualize a whole bunch of different scenarios based on what I'm expecting to come from the markets going forward. So if you find this content of interest, if you like it, please subscribe. Give me any comments below as well. I greatly appreciate it, and I look forward to seeing you next week for the weekend market update. Now, those of you that are part of the alert service or have an interest in being a part of the alert service, I'll put a link on the screen down below, as well as a QR code in case this is something that interests you. But this is where I share trades that I am making in real time. The results I'm sharing with you here right now are all of my personal trades combined with the alert service trades that I've made over the past 12 weeks. I'm trading a new trade I've developed using AI called the Flyagonal. It's a combination of a broken wing call butterfly and a diagonal on the downside. And this trade has been tearing it up in recent weeks. So just taking a quick look at some of the stats, I have made 64 trades, of which 62 have been winners. That's 96.8% profitable trades. My largest winner was just under 2,000. My largest loser, about 600. Only one loser so far. One of them was a $1 loser because of commissions. The average P&L of the trades is $405. Making these trades has generated me just under $26,000 in the last 12 weeks. Many of these trades were shared in the alert service, not all of them, however, because I'm still doing a lot of testing. I'm using AI to help me fine-tune these trades, so I'm trading a lot of different variations of it personally, but these are my full results of this trade. In the alert service specifically, we had these two trades on that were closed out last week. So this one was closed out for $430 in profit, a relatively small gain of only 2.2%. But that is because it did require some adjustments here. So the first two here are the opening of the trade, then there was some adjustments, and then these two were the closing of the trade. Many of these trades do not need adjustments. But when they do, I lower my profit expectations because each adjustment takes a little bit of slippage out of the trade. And if it had to be adjusted, that means that the market was maybe pushing against it on one side or the other. Again, for a large part, you don't need to adjust these trades. I believe about 56% of them to date have not needed adjusting. and they look more like this one over here. This one was put on. 5 days later, it was closed out. Again, there are two components to this trade that were put on. Then 5 days later, those two components were closed out, and this trade had 8% profit in 5 days, around $1,000 in gain. So that's what I look to do with the Flyagonal and other trades. That's not the only trade that I'm trading in the alert service, but that is probably the most common trade. Again, I'll put a link on the screen here to where you can see more about the alert service specifically if you want. And I'm also developing a class on the Flyagonal. So if you look at these results and you want to know more about how to trade this particular options trade, go to the link on your screen and it will give you much more information about the Flyagonal and how to get signed up and registered for when I release that class as well. If you're interested in another video that just tells you a little more about the Flyagonal and how it works, check out this next video here. I'll see you next week, everyone. Take care.